Hello friends, my name is Bhairoz and welcome to my channel where I share with you tips, tricks that I read, learn and apply on myself in order to become my best version. Now for past 5 years, I was living in Canada. However, last month on 1st of July, I made a move to United States along with my family. It was purely a company sponsored move. I was working with the same organization in Canada who have their regional headquarters in United States in Connecticut. Now the reasons for one's move from Canada to United States can be numerous. Economical, financial, social, etc. However, for the purpose of this video, I will only talk about the financial and economic aspect with regards to my move from Canada to United States. Hence, I will be talking about the delta that one should expect in income and the delta one should expect in expenses between Canada and US. There are certainly some pluses and some negatives. I will put all of this together for you. So you should have a fair idea as to how much you should expect to earn and how much you should expect to expense or spend in United States versus Canada, and after netting out income and expenses, how much you should expect to save altogether. Now for me, it was a company sponsored move and I moved on the same role and same level, which means my income level can be used as a good proxy to compare the income levels between United States and Canada with all other things constant. And here the constant are the level and the role and the company. Apart from my personal example, we can also go on Glassdoor and search for similar roles in similar companies in Canada and then compare their salaries with similar roles and similar companies in United States. You will find the delta to be more or less same. Purely on before tax basis, my salary or income in United States is approximately 25% higher than what I was making in Canada after adjusting for the foreign exchange, which is after I convert my Canadian salary from Canadian dollars to US dollars and then compare that salary with the US dollar salary that I make in United States. We see a similar pattern when we compare jobs with similar roles and similar levels in same companies between United States and Canada. Now I do understand it does matter where you live in Canada or United States. So for my sake, I was living in Ontario in Canada and now I've moved to Connecticut in United States. So my comparison will be more or less between Ontario, Canada and Connecticut, United States. However, you can use the numbers that I will share to make an estimate for the area that you are coming from or the area that you eventually want to move into. Now let's look at Glassdoor and compare the salaries for some common job titles. Given my title in finance, let's start with finance roles. So let's say a senior finance manager in Canada would be making somewhere around 134,000 Canadian dollars, while a similarly titled role, which is senior finance manager in United States, would be making somewhere around 136,000 US dollars. Now if we are to round up these numbers to $135,000 Canadian and $135,000 US, this means after adjusting for the currency exchange, the same role in United States would be earning somewhere around 30% more after adjusting for the currency. Similarly, if we compare a key account manager role in Canada versus US, you will find that in Canada, a key account manager would earn somewhere around $96,000, while in US, it will earn somewhere around $97,000. Again, this means that the key account manager in United States is earning 30% more after adjusting for the currency as against a key account manager in Canada, just because Canadian dollar is 30% cheaper than the US dollar. So a brand manager in Canada would be earning somewhere around $74,000 Canadian, while a brand manager title in United States would be earning somewhere around $97,000. This means that a brand manager in United States earns approximately 60% more than a brand manager in Canada, just because the salary is in value terms 30% higher. And in addition, after adjusting for the currency, there is another 30% increase that you get in US dollars versus Canadian dollars. Comparing a human resource manager in Canada would be earning somewhere around $93,000 and in US would be earning around $87,000. If we round the number, this will land $90,000 for human resource manager in Canada in Canadian dollars and $90,000 for human resource manager in United States in US dollars. Similar to how we compared the senior finance manager and the key account manager, the human resource manager in United States would be earning 30% more than the human resource manager in Canada after adjusting for the currency, just because the Canadian currency is 30% cheaper. Now, one caveat, all these numbers that I've shared are average salaries across Canada and across US. However, these salaries very much differ when you move across states in US or move across provinces in Canada. Now, the brand manager example can be an outlier given it was showing 60% delta in United States versus Canada. However, if we take the human resource manager example, key account manager example, or the finance manager example, including my own example, you can safely assume that you can earn 25 to 30% higher salary for the same job in United States versus Canada after adjusting for the forex exchange. And the reason why we are adjusting for the forex exchange is because that represents the real buying power. Now, before tax income is one part of your income. The other part is taxation, which we know that in Canada, the income tax is higher compared to average income tax in the United States. But let's look at the numbers and see what is the range of that delta. Now, before going in the details, let me acknowledge that the taxation differs across states in the United States and also across provinces in Canada. But for sake of ease and comparison, I'm using my personal example where I'm comparing the income and taxation in Ontario, Canada versus Connecticut, US. This will allow you a directional assessment with regards to whether the taxation is higher in Canada or in US, and also will provide you a range. Now, in order to maintain apples to apples comparison, I'm using the same source, which is talent.com, to use the tax calculator for Ontario and compare it with the tax calculation in Connecticut. Now, here note, when comparing with Canada, the base tax rates are almost the same. However, the major delta comes in marginal tax rate, which is the tax rate that is applied to the incremental increase in the salary. Which means if you are in a lower salary bracket, you won't feel much of a tax difference. However, as the salary bracket starts to increase, you'll start seeing a significant delta in the tax rate. So for instance, if someone is earning $100,000 in Canada and they also earn $100,000 in United States, then the average tax rate comes out to be approximately 30% for both of them. However, if you notice, the marginal tax rate is high in Canada, which is at 43.2 as against 38.2 in Connecticut, which is with every incremental increase in my salary, I will be taxed less in United States as compared to my taxation in Canada. Now let's increase this number from $100,000 to $200,000 and let's see how the tax rates change. Now suddenly there is a difference of around approximately 5 percentage points in the tax rate in Canada, which is the tax rate in Canada is around 37.7%, while the tax rate in US is around 33%. Let's further increase the salary to $300,000. And suddenly your tax rate in Canada increases to as high as 43%, while the tax rate in US is around 36.5%. Which is a delta of approximately 6 percentage points. So 6% lower tax in Connecticut, United States compared to Ontario, Canada. And this is the point I frequently make, that Canada, just from income and financial point of view, is best when you're earning less because your taxation is less, plus you get a lot of other benefits from the government like medical, childcare, etc., which is not available in United States. However, if you have a chance of earning higher salary, then United States becomes economically and financially much more sweeter than Canada because there comes a significant difference in the taxation, which on a bigger salary amount has a bigger impact. So a 6% tax delta on $300,000 is around $18,000 that I can make more in Connecticut, United States as compared to Ontario, Canada. Now let's move on to compare the expenses. In order to make the calculation easy, let's break down the expense into 3 buckets. First bucket is needs such as housing, car, grocery, etc. Second bucket is wants such as vacation, entertainment, shopping. And the third bucket is saving. Typically, or let's say ideally, needs should be 50% of your spend. Wants should be around 30% of your spending, and balance 20% should be all saving. I will address the delta between Canada and US within wants and needs, since the balance, which is saving, is just a net outcome of your earning and expenses. Now let's talk about the needs first, which is usually 50% of one's budget, hardly has any delta in cost when comparing United States versus Canada. The only exception here being fuel and car insurance, which I found to be easily 30 to 35% cheaper in United States versus Canada. Note, I did not mention housing here, which is also part of needs because the choice of housing is very subjective. So for instance, in my case, I'm incurring almost the same costs in United States on housing that I was incurring in Canada. However, my living has significantly improved given the size of the house and the quality of the neighborhood here compared to what I could afford in Canada. For sake of our calculation, we've assumed 50% of the spending lies in needs. with fuel and car insurance making up 10% of the needs bucket, which is 10% of 50. So that means fuel and car insurance is 5% of total spending. So a 30 to 35% reduction in a 5% spend bucket would be somewhere around 1.5 to 2% reduction in the total spend. Now it is the wants part of your budget where you should expect a significant delta. To begin with, you will find United States to be 5% cheaper with regards to entertainment and shopping when compared to Canada. And on top, you should expect another 5 to 6% saving purely behind lower HST in the United States versus Canada. So we can expect somewhere around 10 to 12% saving under wants budget. Now, given wants part of the budget usually makes up 30% of your total expense split, a 10% saving in the 30% of your budget would mean 3% saving in overall spending. So 3% saving coming from the wants and 2% saving coming from the needs will add up to around 5% of savings in expenses. So up till now, we've talked about 25% higher salary, 5% lower tax, and 5% lower expenses, which should all add up to make or benefit you by around 35% on your total income. Which means with all other things constant, you can take this extra 35% into your bottom line or your savings. Now, one important piece that we've not spoken about, which is a negative of living in the United States versus Canada, is the healthcare cost. Now, given the healthcare in Canada is completely free, so you'd hardly incur any cost on your healthcare when you're living in Canada, which is not the case in the United States. In the United States, you'll have to buy an insurance, which is partially paid by your employer, but part of that insurance, that health insurance, is paid by you yourself. In my case, I'm paying around $500 from my pocket, while the delta is being paid by my company for my health insurance and my family's health insurance. Now, this is a very generous package which is being offered by my company. However, on average, you should expect to incur somewhere around $700 in insurance cost coming out of your own pocket for your family, a family of 4, let's say. Now, it depends on how much salary you're making because the health insurance cost is in absolute constant cost. However, it would be safe to assume that 4 to 8% of your income would be expensed in your health insurance while living in the United States. So let's put all of this math together. 25% higher salary, 5% lower tax, 5% lower expenses, but 5% higher health insurance costs. So what you can assume is that whatever you're saving in your expenses under the wants and needs will be all wiped out by the health insurance cost. So at the end of the day, you will be making approximately 30% more coming out of your salary and lower taxes in the United States compared to what you would make in Canada. While any cost saving on your expenses will all be eaten up by the health insurance cost. Hopefully this video was helpful for you to now have a clear idea when you're making a decision with regards to moving from Canada and US, purely with regards to financial and economics of this move or of this decision. Thank you.